Hi, and welcome to the Stock Scores Market Minutes for February 2nd, 2015. This week I want to make a shorter term look at the market. We'll talk short term prognostications. We can apply the same methods of analysis on these shorter term charts to make shorter term predictions about market direction. Now, normally each week I look at the 3-year weekly chart and give you a sense of what the long term trend is, bullish, bearish, or neutral. What we're going to do this week is shorten that and look at a 1-month, 2-hour chart where each candle on the chart represents 2 hours of trading. Now for traders, this short-term analysis is more important and relevant. You know, what's happening over the next or over the last 3 years isn't that important for the day trader or the swing trader. For that shorter term trader, we want to give some sense of where the market's going to go in the next week or two. Now we can use the same method using, very simply, a ruler and a pencil to look for charts that are going up from left to right. We want to look where support and resistance is on those charts so that we can see places where price direction can change. So let's start with a chart of the S&P 500. Now keep in mind, this is a much shorter term chart. This is a 1-month look at the S&P 500. And you can see at the end of the day on Friday, there was some pretty strong selling pressure that took the market down towards support. You can also see that we generally have a downward bias through the month of December because we have, or sorry, not December, January, because we have a falling top pattern. So that means in general, the market is showing some pessimism about where the S&P 500 is likely to go in the near term. Now what's important is to watch for whether this green line gets broken or the red line gets broken. The green line is a horizontal line of support. If we have a hourly chart, or even this one, a 2-hour chart, closing down below that line, that would indicate that the sellers are getting motivated to act and that they are likely to send prices lower. If on the other hand support holds like it has numerous times over the last month, well, then we may test the downward sloping red line. Breaking that would mean that the market remains in its long-term upward trend. So what I want you to watch for in the next week or two is for that green line to be broken. Now that could happen on Monday, probably not. Probably we bounce off of it just as we have many times. But for the market to really rebound, we first have to break a line that we would draw across those tops and then ultimately this red line. So generally short term, I'm feeling a little bearish about the S&P 500. All right, moving along, let's take a look at the Russell 2000 Index Fund. Now this is another U.S. index fund, but where the S&P 500 is focused on large cap U.S. stocks, this one is focused on small cap. And you can see that the picture in the small caps is actually better than that in the large caps, at least in this time frame, the 1-month, 2-hour chart. You can see that we have rising bottoms, which is a sign of optimism. We also have falling tops. So that means that this is a neutral chart, whereas the last one was a somewhat bearish chart. By the same token, if this green line of support does not hold, then we need to get a little bit worried. So we want to watch next week for whether that green line gets violated or whether the market can rally up through the red line. And you just take a look at it each day and you'll get a sense of where the market is likely to go based on those lines of support and resistance. The TSX 60 actually looks quite a bit better than the S&P 500, and a big reason for that is that oil and gold are starting to stabilize. Now, oil, and we'll talk about oil in a minute in more detail, is very, very short term trying to make a bottom, and I'll show you this on the chart in just a moment. Gold has been moving up over the last 3 or 4 weeks and actually done pretty well this year so far, and that's given some stability to the Canadian market. Big picture, Canadian market doesn't look all that great, but in the short term, in this time frame, it's possible that we'll see a break up through that red line of resistance. Of course, we could also see a break of the green line of support. That would be a break of the optimism that's been building over the last couple of weeks. So that's what you want to watch for next week. Does the green line get broken? Then we're headed lower. Does the red line get broken? We're probably headed higher. TSX Venture also looking better. I mean, this is probably the ugliest market that I've seen in a long time, and yet in the very short term you can see that that downward sloping red line, that downward trend line, was broken on Friday. Why? Well, oil bounced 8% on Friday, and that gives some stability to the TSX Venture market because so many companies listed on this market are energy companies. Combine that with the stability we're starting to see in the gold miners, and you've got a reason for the TSX Venture to finally look a little better. Now, long-term picture, not great. Short-term, if you're a swing trader or a day trader, maybe time to come back and look at the TSX Venture stocks for a bounce back. Here's the U.S. Treasury Bond ETF, TLT. You can see it's in a very strong upward trend. Really long term, it's in a strong upward trend, but it's gotten very steep lately, and I really see no reason to think that that isn't going to end. What you want to watch for is, does this green trend line of support get broken? That would imply that we're going to get a bit of a pullback in bond prices, which means interest rates go up a little bit. However, last week, interest rates went down a lot. Why? Because these treasury bonds were heading up. The whole bond market was going up. When prices go up of bonds, that means interest rates go down. US dollar ran away from its trend line, and right here you can see that, and it's pulled back to the trend line. The trend remains bullish. The trend remains up. A little bit of a concern perhaps for the US dollar upward trend because we're starting to make a falling top, but we're talking a very short-term cause for concern. Now, if the market breaks down through this support price, that green upward trend line, we may finally get a pullback in the US dollar. For now, I don't see any reason to doubt the bullish market in the US dollar. Gold, there you can see the bounce back that we had in the early part of January. The last week and a half, 2 weeks, we've seen a little bit of a pullback, but that's expected. Why? Because prices ran up and away from the trend line. We're now coming back to the trend line. We bounced, and now what we have to watch for is, do we break the red line or do we break the green line? Break the green line next week, we're going to get more of a pullback in gold. Break the red line next week, and we'll probably see a continuation of the upward trend that started early in January. And there's oil. We talked a little bit about the bounce in oil. Actual oil prices went up about 8% on Friday. Very overdue. Really not a reason to jump up and down with elation because oil has fallen so much, but it does give us some cause to think that oil may try to make a bottom here. Now, how do you play it? If you are a long-term investor, you don't watch the market very closely, don't go out and buy oil stocks. It's still too early. If you are a trader, if you have the time to watch the market, if you swing trade or day trade, we could see some good positive action in a bounce back in the energy stocks next week. But the reason you have to watch it closely is because you don't know if that's going to last 2 hours, 2 days, 2 weeks, 2 years. At this point, it's very early signals of a bounce back in oil. And so you want to be very cautious. All that's happened is we've broken a downward trend line on a 1-month hourly chart. And until we can see some rising bottoms build, some sustained buying coming back, we shouldn't get too excited. If you're a day trader or a swing trader, great. Play these stocks next week because you could see some action. But if you only look at the market on the weekends, I still think it's too early to play those stocks. Here you can see the big spike up in volatility that we had this week. That shows investors are getting worried about where the S&P 500 is likely to go in the near term, and that's another cause for concern with a breakdown potentially next week in the S&P 500. Now that's a short-term breakdown. That doesn't mean we're breaking the long-term bullish trend yet. It just means we could see more selling pressure next week, and the VIX is supporting that argument. So my outlook then for U.S. stocks, long term, I remain bullish. We've got a long-term multi-year bull trend, but in the short term, we're seeing that bearishness come in, and that could mean more of a pullback in the U.S. stock market. Canadian stocks, I've got a neutral rating, both short and long term. The short-term picture is actually shaping up pretty good, and if we can break through that line of resistance that I showed on that chart, we could see a bit of a rally back in Canadian stocks next week, and that would depend very much so on what oil does next week, and you want to keep a close eye on that. My longer-term outlook for Canadian stocks is neutral. We've got this volatile, uncertain, sideways trading range, and I think you still got to be pretty cautious with Canadian stocks unless you are a more active, shorter-term trader. Gold, neutral on both time frames. We've stabilized. The patient is out of intensive care, but there's still work to be done to get this gold market going. And I think right now, gold is dealing with just lots of resistance to have to work through. We talked about that last week. So I think we could see some good action. We could see some bad action. it's going to be a tough one to call. You just have to take it day by day with the gold stocks. Oil, long-term bearish, but a little bit of a positive signal in the short term last week on Friday that makes me want to raise my short-term rating from bearish to neutral. So U.S. stocks are testing some short-term support. A breakdown could lead to more dramatic selling pressure. Canada is stabilizing and may bounce back if oil can stabilize, and that's the key to watch for next week. Gold likely stalls its recent strength, but it could go either way. We got to watch it very closely. I showed you the chart and what to look for. Oil is showing signs of a short-term bottom. Active and savvy traders may take advantage of a bounce in the energy names. Well, that has been the Stock Scorers Market Minutes for February 2nd, 2015. Have a great week in the market and trade well.